Hi folks, Lee Gettess here with the Market Sense for the week of March 1st, 2016. We're going to look at some charts that come from the Trade Navigator software. And the first chart we're looking at is the weekly bond market chart. And you can see after this big, huge spike week up here a few weeks ago, we've kind of kept everything inside to that. We appear to be breaking down a bit now, but I wouldn't get too excited just yet. The resistance up here is around 165, and they went to 165.10 before turning down, so that's close enough given the volatility. We're looking at support here in the 162.16 area. Again, they've been a little below that, but doesn't mean it's really breaking yet. You got to give them a lot of room in the current condition. The thing is, if they break down hard, the closest swing high they have that they broke out from for this trend is down here below 159. So there's plenty of room for them to go lower, and that wouldn't necessarily make it ugly. Although I will say all of this move up and this tremendous price up here near 170, that's a lot. It wouldn't surprise me if they back down a little bit here. I mean, after all, go back here to December, the Fed did raise interest rates. And you remember interest rates and bonds go in opposite directions? Yeah, of course they do. In stocks, we've got a little sign of life here. They looked like they could potentially, and I emphasize potentially, go down back below 1900 and find support here around the middle moving average. But they have not done that. They found support up here closer to 1929 at the upper moving average. Again, they were through that by about 9 points, but that's a pretty good sign. Now, they have also rallied up, and we've got the projected high here at 1978, and that's pretty much where they've gotten to. And that area sort of coincides with this low here, the swing low they broke down from. That's actually just above 1980. I think it was 83 and a quarter, 83 and 3/4. But, same general area. So they could possibly find some resistance here and get knocked back down a little bit. But it wouldn't surprise me if they show some real strength and at least go up in the middle of this congestion area here, which is really up more like 2050. I mean, you have to understand you've got a double bottom here, which is actually a marginal new low that they recovered from. And that's sort of a smaller fractal of a big picture deal where they've done the same thing going back to the October low of 2014. Same thing, marginal new low and recover from that in a much longer term chart. So the potential is there for a pretty good rally here. I'm not sure I see economic conditions that warrant it, but doesn't really matter, does it? The market will do whatever it wants to do regardless. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.